Welcome back to the last London Direct of the year, and I'm at the offices of Accendo Markets, and I'm joined by Mike and Dulken, and we're going to talk about many different topics. And let's start by the UK unemployment data. A big surprise. I think the markets were looking for 7.6, came in at 7.4. It's a pretty impressive figure.
It's a big drop, and don't forget it's a key part of the forward guidance of the Bank of England. So getting us ever closer to what. Well, we do have a 7% threshold to be looking at, but in reality it may well be a little bit lower than that. But in any case, going in the right direction. 250,000 job ads in those 3 months is a big old number. But as per usual, got to be balanced with a bit of pessimism. Average earnings still not even up 1% over that 3-month period.
Do you think Mark Carney cares about that slow wage growth?
I think he'd be more interested in the fact that the inflation is cooling closer to the target of 2%, which could leave him off the hook without having been potentially something which could have triggered an earlier rate rise and what got markets so interested. So understandable move by cable today, bouncing off that support and back towards its recent highs, but has yet to see a major break from that narrow range.
Yeah, last time I came here we were talking about the Santa rally. You've given me lots of statistics, lots of numbers, backing it up, saying, you know, statistically it could happen, but what's happened? It's
just not been the year. I mean, as you said, the statistics were very much in favour of a positive December. However, you know, we noted that the average December had been a positive to the tune of 2%, but with only, I think it was three negatives within 22 years. And so the statistics were favourable, but it was by no means a given thing that we would have a positive December. Had a rocky old start. I think we were down 3% before the beginning of this week. So we've regained something, the bounce this week, sideways into the Fed meeting. We'll wait and see whether that can help us higher or indeed push us further lower. But it looks as if this year may not be the one for the Santa, for a positive December. Then again, if you take your base as of Monday morning, then we're still looking okay for a technical Santa rally into the holiday week.
Yeah, let's switch our attention to next year. I mean, the UK economy, as we've discussed already, seems to be performing relatively strongly compared to many of its Western counterparts.
Yep.
Does that mean the FTSE as an index can decouple itself slightly from other indices elsewhere in the world, which maybe won't perform as strongly because their domestic economies won't perform as strongly as the UK?
Well, I mean, looking at the way the FTSE's, it really is the index which has corrected the most since the end of October. And, you know, at some point we were wondering, look, has that gone a bit too far? I think the correction by Monday was well over 6%, which is quite a lot compared to, I think, the 10% rally from the October lows. So in terms of decoupling, you know, Europe is struggling. We've got the divides and the divergence. It's still a big trading partner for the UK, but don't forget, as we said last time, the FTSE 100 is not made up of UK companies. There is such exposure to emerging markets, mining and other industry, which are really very little to do with the UK. So there is potential to see a very different message from the stocks versus the actual economy. But I'm still relatively optimistic for next year that both the UK economy and the components of the FTSE 100 will do okay.
What about your projection for the FTSE next year? I think Citi have this outrageous projection of out 8,000, where it's going to finish next year. I mean, yeah,
not that high.
Yeah, not that high. But so what do you think realistically we're looking at?
I mean, I would like to see us. First of all, we need to get through the all-time highs. We're one of the only indices which has not been recording new highs week in, week out while the markets were rising. If anything, we were correcting at the same time. So you've still got to get through. We need at the moment, I think, to break through 6,650. First of all, that is the ceiling of the falling highs from the end of October. Then we've got to deal with 6,820, and then we've got to look at the 6,900s, which were the all-time high. So I think to look at something in the region of, it'd be nice to see 7,000 beaten by mid next year, but that's not to say there aren't plenty of moving parts to scupper things along the way. We've got some progress in Europe with the banking union and a backstop, and the right noises coming out, but then you've got the likes of people like Slovenia where there look to be issues there. It's small, but it's still another potential hurdle to overcome. So I'd like to see 7,001 mid-year. Whether I could stretch as far as 8,000 like City, I think that might be a bit too far.
Yeah, let's finish off. We talked about an assortment of things. I know you've been writing about Bitcoin in your daily notes. It's a story that keeps getting the headlines, whether it deserves it or not. It's probably another conversation. But
yeah.
Do you think we're still going to be talking about Bitcoin this time next year?
This time, who knows? I mean, the real history of Bitcoin, or the media coverage, is only really about 6 months old. When it jumped from $100 to $200 and then back again, the coverage grew over the summer, and then it rallied from 200 to 1,200. So the media coverage has increased the speculation, which has increased the media coverage. So it's a bit of a vicious circle, exacerbated today by the move by the Chinese to put curbs on its use by financial institutions and payment. And so we're back down at 500 again. So huge volatility. I think the regulators are piping up about not liking it for its risks. In terms of vying as a genuine currency alternative, not yet. But I'm sure the hardcore among them, the real believers, will just see a regulatory response as proof that it could be a real threat in years to come.
So if I was to give you an option of 10,000 bitcoins for Christmas or 10,000 euros, what would you take?
Right now, definitely take 10,000 bitcoins, but cash them in.